We have just finished the month of May and we are going into a new month, which is June 2025. And today we're going to talk a little bit about the dollar, in particularly the dollar index. We all knew that the dollar index actually ended 2024 on a very strong note going into the inauguration of Donald J. Trump as the 47th US president. And the dollar actually started off pretty strong, but it has since been coming off. In fact, it has come down so much that it has practically erased all the gain that it has made for the whole of 2024. Now, we want to take a look at the overall price structure to get a sense of where the dollar is heading, whether it is already bottom or whether we are likely to see further declines in the days going forward. What you are seeing in front of you here is the overall price action for the dollar index from the beginning of the year 2025. We can see that it has been declining very steadily. Like I said earlier on, it started the year very strongly, leading to the inauguration of Donald J. Trump as the 47th US president. And it has been climbing down quite steadily. And that has a lot to do with the announcement on April. In April the 3rd, we can see that the president actually announced the Liberation Day tariff policy, which have negatively impacted the dollar, leading to a decline all the way into the third week of April, resulting in the dollar index hitting a bottom at 97.68. It has since bounced back to 101.82 on the prospect of a truce in the trade war between the meeting of representative between the United States and China in Geneva, and that has resulted in the dollar rebounding back to 101.82. But since then, it has returned back more than 50% of its gain from the low of 97.68. Now, to get a sense of where the dollar may be heading, as to whether the dollar has already bottomed or are we expecting further decline in the dollar, let's refer to the price chart. And this chart I'm going to show you here is obviously leading to the monthly time frame. We can see that the bottom in the dollar index was in the early part of 2008 at the height of the global financial crisis, and the low in the dollar index was 71.05, and it has climbed steadily to all the way to 114.75, which is the early days of the war in Ukraine. Between Russia and Ukraine, we can see the dollar index peaks out at 114.75. And since then, the dollar has come under a bit of a pressure, resulting in what appears to be a three-wave pattern from 114.75. We can see that if this is a three-wave, the equality is somewhere between 90.83 to 94.50 levels. So this will be suggesting that we will be seeing further losses if this three-wave pullback is still in motion. But overall, we can see that the dollar directional bias is bullish, and the pullback from 114.75 can only be seen as a technical pullback targeting 90.83 to 94.50. So that set the background for the outlook for the dollar index. And to see where we are heading, I want to refer to this area here, which is the most recent pullback from the high of 114.75, to give us a sense in the lower time frame where we can see if there's any trading opportunity. Now, this area here, to get a sense of where the market is, we will refer back to the weekly time frame. Here we can see that the dollar from 114.75 is pulling back in a classical three-wave pattern, targeting 90.88 to 94.53. That will be the ideal equality levels. So going forward, that should still point to further losses in the dollar index. However, that would not be good enough for trading. We want to zoom in on the most recent activity, which is this area here from 110.01. So here we want to refer to the next lower time frame, which is the daily time frame. So you can see the 110.01 here, this move here all the way down to 97.68 appears to be pretty impulsive, and we can detect what appears to be a developing three-wave pullback. For those who are familiar with Elliott wave theory, we can see that the movement from 109.75 all the way down to 97.68 appears to be the most impulsive of this price decline here. And the rebound from that low at 97.68 all the way to 101.82 appears to be a three-wave rebound, suggesting that this is possibly the end of the fourth wave. And if we are correct, then going forward, the bias is for the continuation of this move from 110.01 all the way down below the 97.68 low towards 94.35 to 95.38 level. So that will be based on the daily time frame. Again, we want to take a look at the much lower time frame to get a sense of whether we can actually position a trade going forward. Okay, for this, we will refer back to this area here, and we can see it clearly in the 4 hours time frame. So we have this very large ABC move here that is incomplete. Here we can see that the low at 99.07 is resulting in a bit of an internal bounce here. So internally, we can see that there's a possibility of a three-wave bounce, okay, before the market resumes its downside decline. So if this is correct, this three-wave bounce ideally should result in an area at 99.75 to 99.88. So this will be quite ideal level to really consider positioning short. Okay, that will be my view going forward. If my view is that I think there will be further losses in the dollar index going forward, and ideally we want to see that in the early part of June going into next week's trading. Here, this is going to be an area of interest to me, and I hope it has been useful to you. And I shall see you in the next update. Bye bye.